Good evening, everyone that's joined us for our special project webinar on behalf of Becontree Avenue in London and Dagenham. So joined tonight by AJ and Lena from PLMD Group Ltd. How are you guys?
Very good, David. Thank you for having us here.
Thank you for having us again, David.
No problem. Absolutely delighted to have you back on. Looking forward to this Q&A tonight. And our resident investor portfolio manager, Dal Ray, is with us once again. Hi, Dal.
Hi David. Hi, everyone.
Fantastic. And Dal, of course, will be watching the Q&A later. So just some housekeeping then. We don't use the chat box for these webinars, but you can ask questions via the Q&A. So along the bottom of your toolbar, you should see two wee bubbles, the Q&A. If you put your questions in there, it means that everyone can see the questions. It also means that Dal is able to select the ones to answer, and it's easier just to control the Q&A as normal. If we do run out of time, we can print out the Q&A, get AJ and Lena and the team to answer the questions, and we can email them out to everyone who attended the webinar. This is being recorded, so a copy of this will be sent out to everyone. So this is a project webinar for Becontree Avenue. We did one of these last week. There were a lot of really good questions, and we just felt, AJ, it'd be good to come back on and just do a Q&A for tonight and try and just make sure we clarify any questions and give people who are looking at it an opportunity to hear from you again.
Thank you, David.
No problem at all. So if you go to the next slide, just our normal compliance caveat. Obviously, as the attendees will know, we are an equity property crowdfunding platform. I'm the CEO of the platform, and along the bottom there, you'll see that Leo Crowdfunding is an appointed representative of Sharon Limited, which is authorized and regulated by the Financial Conduct Authority. Pitches for investment are not offered to the public, and investments can only be made by registered investors on the basis of information provided by Leo Crowdfunding. So if you're on this webinar or you're listening into the webinar, it means that you're registered on our site or you've registered interest in this particular project. And that's why we've engaged with you to invite you to be involved in this. So this is equity investing. This is not loans or debt. Investors have the opportunity to buy shares in the SPV you're going to hear about. And you obviously are encouraged to do your own due diligence, read the documents, and make your own informed decision if this is an investment suitable for you or not. So next one, please. It's absolutely brilliant to start off tonight with some really fantastic news, and that is that this project is actually a successful project. We've already reached the minimum. So the minimum of this project was 100,000, and I think, I'm not sure, Dal, was it yesterday or this morning? I can't remember which. I think it was this morning. This morning.
Yeah.
This morning we actually went over the 100,000. You can see there we're now at 114,000, so we're at 114% funded on this deal. So the deal is successful. Obviously, we'll be moving to the shareholder agreement, and providing the investors are happy with that, then we move to drawdown, and the funds are sent to the SPV. So it's a great place to start tonight. The deal is successful. The champagne bottles, where I could hear the pop in AJ's office there all the way here in Northern Ireland when we were successfully funded. But we thought we'd go ahead and do the Q&A because the maximum on the raise is 200,000. So there is still potential for investors to invest and be part of this journey. So what is this all about? I'm going to hand over to AJ now, and AJ and Lena are going to take you through some of the key information about the project, and then we're going to get into some Q&A. So again, to emphasize, if you have a question or a comment, please put it into the Q&A. Dal can keep an eye on that, and we'll do our best to get all the questions answered. So AJ, happy to hand over to you. I think you're smiling because you've had the raise is now a success, and over to you to go through the presentation.
Thank you, David. Thank you for the introduction, and hello to everybody. I just wanted to start by saying thank you for people who have invested with us. And we obviously feel very good about the fact that we have reached the target. It's definitely an accomplishment. And thank you, David and Dal, for being with us in the journey so far. This is actually a very interesting project, and let me just tell you a bit about it. So the picture that you see on the left-hand side is what we bought in 2018 and 19. This is what we developed out of it. So you can see when we did this to this was actually a win-win-win. Win for the area, because this was a disused office building warehouse converted into a club, and now these are 9 apartments and a ground floor commercial unit. There are 4 1-bedrooms, 5 2-bedroom apartments with parking. The beautiful thing about this is that this has a communal roof garden, which was very useful in COVID times, because I have seen people doing like barbecues there, winter barbecues in there. I've seen people going there and sitting there and saying, wow, we can't go out because it's locked down, but at least we have our own communal space on the roof. I've seen people doing some parties up there and enjoying generally, which was amazing. The one thing that I do want to point out is that the development has its own solar panels, which you can see here, which means all the communal areas are illuminated by solar panels. And this is a huge step towards the green development. So from here to here, it has been an amazing journey. And now there are very good rental returns in this investment. And those rental returns is what we're trying to share with the investors who would onboard onto this investment. I will move forward and tell you a bit more about this. So this is, as I was saying earlier, we're sharing the rental returns, which means this is an income generating asset. I'll pause there because I want to ensure that we all have understood, which means it's generating income from day 0. There are obviously quarterly payments, so it's not like you're waiting 2 years for the returns of 1 year. You're getting returns every quarter because rents are coming in every month. They're all privately rented, which means we have personally vetted these tenants. As a company, we build these properties, we rent them out, we manage the tenancies, which means we build them the best way we can build them because that will reduce the maintenance cost. We find the tenants which we know will be paying rent in time, on time, every time, so that we can maximize the returns. And let's talk about returns. We're talking about 24% projected ROI over 24 months, which in my view is pretty good. Because if you look at the rental yields in and around London, you get figures like 4% or 6% with the addition of management hassle. This is the net return that we will be offering, and we will take care of the management hassles. Let me tell you a bit more about this. So the passive income investment that we're talking about here means the investors will invest the money and then they will wait for the returns to come through. There's no property management because we are an experienced operator. We manage around 90 of our own units. So we know what we're doing and we'll be doing it for 20 years. There's no construction risk in this. The reason I'm emphasizing this is you can see this is a completed development. This is the internals of the development. This is the externals of the development. Nobody's changing anything here. This is completed, done, dusted, income generating asset. No construction risk, no property management for the individuals who are investing into this. This is quite important because this should not be compared with an investment where we're going to dig a hole in the ground and God knows what we'll find. There's no permissions issue. There's no neighbors who will cause a problem. This is all done, dusted in that sense. Let me explain a few more things about this. So I'll stop here and I'll open the Q&A so that we can look into this deal in the way we should be looking into it. David?
Yeah, if you just go back up one slide, first, AJ, please. Just want to make one further. Yeah, so one more back up to that last. Perfect. I think you make a really good point, AJ, regarding the construction risk. A lot of our projects on the platform have been development projects, where people are raising equity to start, to build houses, or some cases even to do a refurb on an HMO. But the building itself as is, or the land as is, doesn't produce any income. The whole project is to get it into a state to produce income. What you're offering here, construction is complete, but you've also got a track record of a number of years of these property, or the various units, the apartments being let out. So you're able to show a rental income. So you already have an asset that's producing income, and you're effectively selling shares in the SPV, which will then be able to receive a dividend of the income. I think that is something that it's very, very, very attractive to a certain type of investor, because it really is an income type product. I think you're right to emphasize that.
Thank you, David.
Yeah. So if we go to some of the questions, and I think, Dal, it's fair to say there's been a lot of questions, because this is a slightly unusual type of project that we've done here. Dal, who obviously speaks a lot to and answers questions directly from the investors or from the forums, but it's fair to say, Dal, there's been a number of repeated questions that have been asked as you have spoken to the various investors. So we've listed some of those out to give AJ and Lena a chance to deal with them.
Yeah, absolutely. I think some of the typical questions that hopefully we can get through today, and any other additional questions that anyone wants to ask, feel free to do so on the chat. But yeah, kind of mainly, I think, kind of understand the project in itself. As you quite rightly said, David, it's the first, or one of the first projects that we've had of this type. And it's a very exciting project for us in terms of the platform. Yeah, a lot of questions from investors, which is great. So this now gives us an opportunity to go through those.
Yeah, and we love talking about education, and this is a great product for those to maybe understand this type of project, as it's different than development. So question number one to AJ and Lena, what is the risk profile and how will you mitigate it? So of course there's risk in all property investment, and we have talked about how risk is mitigated. Do you want to just explain that a bit more as to what you mean by that, please?
Yep, absolutely, David. I'll take this. So as you said, all investments have risk. Now let's look at the risk that you would have in an income generating asset like this. I think the first risk we have to look at is overall, is there a risk to the property? Yes, there is a risk to the property, as every property in the world has risk. But what we have done to mitigate this risk is we have an insurance on the whole property through a well-known company, Aviva Insurance. And that's probably the best you can get in UK. And that company has got insurance on the whole of the property. And that's how we manage and mitigate the risk on the property. Now let's talk about another risk. And these are the things that we go through in our internal meetings as to what other risks there are. So the next risk is the tenants. We personally vet all the tenants. We do credit checks on them. We do all the checks on the tenants to make sure we get good tenants. And on top of that, we buy rent protection insurance from a reputed provider, which means if the tenant, in the worst scenario, is not paying the rent, then the rent protection insurance will get taken and we'll get the rents, which means we can keep paying the returns to the investors. Now, the other risk that you would have in a property like this is some issues with landlords and tenants. And that is also landlord liability insurance, which we have again with Aviva. So obviously there are risks, but there are things that we have done to mitigate those risks. One other risk that comes to mind is the interest rates could go up significantly. And that happened last week. And honestly, we were smiling, the interest rates went up because we knew we have already planned for this. So we have a fixed mortgage for 5 years, which means all the interest rate risks that would happen in this duration, we will be insulated from those things, which means our investors will also get the benefit of that. So I'm not trying to say there's no risk. What I'm trying to say is we have thought about those risks and we've mitigated those risks as best as we could.
Okay, I think that's answered that well. So you can,
Yeah.
I think, Dal, I think you're doing the next one.
I think this is just to highlight some of the kind of the summary around it. I know a lot of investors have asked this. So from a gross profit perspective, AJ, if you just want to run through this, and I think we've got the next question on the next slide.
Yep, absolutely. So the gross and the net rental income. So this is the gross income that we're going to get in 2022 until 2026, which we know based on rent projections. We have already taken into account that there could be vacancies. Having said that, the ground floor commercial unit is let out to an estate agent. And he takes a lot of pride in making sure nothing is available in this unit because he's sitting underneath. We have our own estate agency, but we work in partnership with him. We still have thought about that one flat could be empty for almost 6 months, which is probably the worst case you could have in vacancy, especially in Dagenham. Dagenham is so well connected. There's two tube stations next to it. Within walking distance, there's a train station. And that's kind of the planning that we have. Even if this happens, we're still okay. We've kept 1% of marketing, we kept 5% of maintenance. Remember, this is a new building. We don't expect any issues in the next 5, 6, 7 years. Yeah, issues normally would come in a building like this after 10 years. We still have got maintenance cost of 5%, miscellaneous of 1%. The one thing that I do want to point out is that this is the investor returns and this is our profits. So there is enough in this because these are priority shares. That means the investors will always get priority with the returns, which means we have to lose so much before it comes to the first pound that the investors' return will get affected. And we as a business are not going to lose that. So this is the gross and net rental returns that we have on this.
Yeah, I think it's very helpful when people can see the level of detail, and you've obviously covered for the eventualities as any good rental spreadsheet would show, because there is a big difference between the gross and the net. But you've clearly laid out the net so people can look at that and see it very transparently, which I think is really good. So again, a really good question that has been asked, I know, by numerous people, because we have talked about how this building has been built and been tenanted for a period of time. So what is the occupancy rate from the beginning? So when it went on the market, how long did it take to fully let, and how long has it then been fully let?
Yeah, so David, the occupancy rate so far has been 100%. With the no property has been empty from day one. But we took few weeks to rent them out. Of course, at the beginning, it was like 2 or 3, 4 weeks maximum. But from that day to this day, the occupancy rate is 100%. Of course, we mentioned previously why Becontree, why Dagenham is a good location and has high demand from renters, because it's easy access to London and affordability of prices and the origination blend in the area. So that give us another positive point from this perspective.
Yeah, and the only thing I would add is this 2 to 3 weeks period include the period that we go through on credit checks, ensuring we get the best tenants we can get for the development.
Yeah, okay. That's fine. Again, just remind everyone, if you do have any further questions or any follow-up questions, then please stick them in the Q&A and Dal can deal with them. So I think it's over to you, Dal.
Yes, so just with regards to the estate agent, I believe it's a lease for 3 years, is that right?
Yes, it is, yeah.
Just wanted to kind of highlight that. So another question, so this is a common question that's come up. What is the current mortgage term?
So the current mortgage term is 5 years. We are 1 year into that 5 year. So we have a fixed period for another 4 years, which is what I said earlier as well, that insulates us from any kind of risk or any changes in the interest rates.
Yeah, and it's on 25 years. The first 5 years are
Fixed, yeah.
fixed, and the 20 remaining are variable.
Okay. Thank you.
So then what is the investment term or the length of investment of this project? And what about capital appreciation? Want
Yeah.
to deal with those two?
Yeah, thank you, David. And so as per the equity documents, the investment term is 2 years. So the investors will get the 24% return out of the rental income for a period of 2 years. And the question of capital appreciation, so the 12% return is inbuilt with the capital appreciation that investors will get for a period of 2 years. There are possibilities of staying invested for the longer run and get capital appreciation when we can invoke liquidity events, but the details of that would be in the shareholder agreements.
Mm-hmm. So yeah, there's a point you make that the 12% per annum projected, which is obviously 24% over 24 months, you've built some capital appreciation into that. And I mean, normal rental yield in London, what, 4 or 5%, AJ, would be pretty healthy if you were getting that. You're obviously offering 12%. So there is clearly some capital appreciation built into your returns that you're offering on a quarterly basis.
Yep, absolutely.
Yeah, that's grand. And then when it comes to the capital appreciation in terms of the 4 years, as you say, the shareholder agreement will go into detail. But in principle, absolutely, a shareholder who owns shares in the SPV, if the SPV reaches a liquidation event, then absolutely there's capital appreciation built in, or will be paid at that point, the 4-year point. But it'll be covered in the shareholder agreement how that breaks down. And again, we often talk, AJ, in the world of property that investors sometimes will focus in on the capital appreciation, but sometimes forgetting the market can also depreciate at times. So nobody can predict the future. We all want a healthy 3, 4, 5, 6 years, but of course, there's obviously no guarantees of an appreciating capital over the next 5 years.
Yep, absolutely.
Yeah, I think I just want to add something, that it's not just the 12% projected ROI, it's the 54% rental shares. That means we will split our rental with our investors. It's not that just the 12% is the center of the calculation.
Mm-hmm. Yeah, no, that's a good point. Effectively, it's a rental share. And if the rent goes up, then so does the return to the investors. Correct. That's a really good point to make. So, again, if anyone's any questions on that, they can fire it into the Q&A. And again, we're happy to deal with any questions on anything we're covering. So I think that's taking us more or less to the end of the questions. Was there anything else, Dal, that's either come in, or any other questions you have from investors you've spoken to?
Not at the minute, no. But just want to highlight again, it's a quarterly return. So anyone looking to invest, just as an example, on the previous presentation, £10,000, for instance, will give you £300 per quarter. So just to kind of get your head around that. But of course, going forward, if there are any questions, you'll have my details at the end of the slides, and feel free to reach out anytime.
Okay, excellent. So just the last couple of slides then from me to wrap up the webinar tonight. All the information about the project can be downloaded in the equity offer document. So you get that from going to the pitch pages. If you go to our homepage, leocrowdfunding.com, and you'll see the Becontree project there. When you click on it, the thumbnail, you'll see on the left-hand side of the screen an overview of the project. You can see the summary of the financials. You'll be able to look at the whole team behind AJ. And also there's a forum, and there are a number of questions that have been asked on the forum and then answered. So that's a good source of due diligence. And then you can see the blue box there, where once you've registered, you can actually download the equity offer document, and that will give you more detail than we can cover in a short webinar tonight. A lot more on the financials, a lot more on the projections, and it lays out the details of the investment with a term sheet, as well as some attachments which show the track record of PLMD Group and some of the things they've done, and really quite an impressive portfolio of around about 25 million assets under management currently in the group. So you get a chance just to see some of those. So that's like the first step of the DD. And if we just go on to the next one, in terms of then those that want to take a step forward. Now, this project will close, or is intended to close, this Friday at 5 p.m. So the plan is that it will close. It's obviously already reached its minimum, so we can actually close it down now. If you go just back up again 1 second there for me. Yep. So if you have a look there, you can keep an eye on the amount that's currently being raised. So it's 114 now, but keep an eye on that, because once it reaches 200, then that's the raise closed. So you can go on a waiting list, but if you do think this is something that you would like to invest in, then keep an eye as that number goes up near 200,000, because that is the cap. So when someone does want to invest, you need to make sure that you're investor ready. What that means is that you have completed your KYC, done your AML, passed the short appropriateness test. And then when you've done that, then you'll get to this page here, where it will let you invest if you wish to invest. So you select the investment amount. You can choose to either transfer your funds directly from your bank, in which case select bank, and it will give you a unique reference number, or you can move funds onto your project e-wallet, which is attached to your account. So it doesn't really matter which route, whatever suits you. But once you do that, you have then pledged on the project. And then once we close it on Friday, there'll be a shareholder agreement is issued for you to read through and look at the various terms of shareholder agreement. And then when you're happy with that, you accept the shareholder agreement, and that triggers your investment. So at this stage, it's a pledge. You agree, accept the shareholder agreement, and that means then that you've invested in the project. So again, if you have any questions on that, reach out to Dal and he can talk you through it. But it's already funded, it's reached its minimum target, will close on Friday, and it's just a matter of who else wants to be sort of on board for the ride. And then Dal, I'll let you just take the last one then, just in terms of your details.
Yeah, so reach out, dal@leocrowdfunding.com. I've spoken to various investors who are obviously waiting for this webinar. So I'll reach out to you tomorrow. I'll also send a recording of this webinar to anyone who's recorded any interest previously as well, whether it be on the first webinar or this new one as well.
Okay, so we'll give it 30 more seconds in case there's any other questions want to come in. Any last minute comments from AJ or Lena before we close off?
So I obviously wanted to take this opportunity to say thank you, David, thank you, Dal, and thank you, Lena. And thank you for all of those people who have invested with us. And thank you for those who are the audience today, because I know it's never easy to be here Monday evening at 7 p.m. So thank you all for hearing us out about this exciting investment.
Yeah, thank you, David. Hopefully this webinar will be helpful and would answer some of the questions that investors would have.
Yeah, no, I think it's been very good just to get a chance to deal with the questions in detail, and it'll be good for the recording to go out to those who are looking for it. So thank you both for your time. Thank you, Dal, obviously for taking the time to join, and for the various attendees of the webinar. We trust those have answered your questions, and if this is an investment that suits your investment portfolio, well, then you can take action as it does close on Friday, 5 p.m. as we've indicated. So we'll leave it like that. It's always nice to do a webinar when the project's already successful. So reach the minimum, and now we're just seeing who else wants to join the journey of the Becontree project. So with that, we will leave everyone. Fantastic. Have a good evening, and we'll catch you all soon. Bye-bye now.
Thanks, David.
Bye.